NIO stock enters Friday's pre-market with the wind at its back. After a strong Thursday session, the company closed at $5.54, up 47 cents on the day, a gain of more than 9%. That move not only extended NIO's rally, it cemented something investors haven't seen in a long time: 3 consecutive closes above $5. For traders and long-term holders alike, that's an important shift, because it changes the way the stock looks on the chart and, more importantly, how it feels psychologically. The question now is whether that momentum can hold into the weekend as the entire market braces for Federal Reserve Chair Jerome Powell's remarks at the Jackson Hole Symposium. This is where things get interesting. On the one hand, NIO has clear, company-specific momentum. The Onvo L90 SUV has been well received, pre-orders are encouraging, and analysts are beginning to take notice. Macquarie just upgraded the stock to outperform, citing the demand they're seeing in the mid-market EV segment. On top of that, CEO William Lee has been describing this as a harvest period, signaling that the heavy years of investment in infrastructure and technology are starting to give way to execution and growth. That kind of narrative shift matters, because it reframes how investors think about NIO, not as a company burning through cash indefinitely, but as one starting to reap the benefits of its long-term bets. On the other hand, we have the macro backdrop. Powell's speech at Jackson Hole is always one of the biggest events of the year for financial markets. Traders look to it for clarity on interest rates, inflation, and the central bank's outlook. For growth stocks like NIO, the stakes are high. Lower rates and dovish signals generally provide a tailwind, making it easier for investors to justify valuations and bet on future growth. Hawkish commentary, on the other hand, can hit these kinds of stocks hard. That's why Friday is shaping up to be a real test, not just of NIO's momentum, but of its ability to stand firm when the tide of the broader market shifts. It's worth stepping back and looking at just how significant Thursday's move was. 9% rallies don't happen every day, especially not in a week where the broader indexes were flat to down. That tells us that something more than just market drift was at play. Analysts pointed directly to the Macquarie upgrade, but the strength of the move suggests there was also a fair amount of short covering involved. NIO has been one of the more heavily shorted EV names for months now, with skeptics betting that it can't compete effectively with Tesla, BYD, and the swarm of smaller Chinese rivals. When a stock like this breaks a key level, shorts sometimes rush to the exits, buying shares back to cover their positions. That extra demand can turn a rally into a surge, and that's likely what we saw play out into the close on Thursday. Now, 3 consecutive closes above $5 may not sound dramatic, but in the world of technical trading, it's a milestone. $5 has long been a dividing line in the market. Below it, a stock is seen as distressed, something many funds won't even touch. Above it, the perception changes. To not just break above but hold that line for several sessions changes how traders screen for opportunities, and it can bring in buyers who were previously sitting on the sidelines. It also creates a new battle line. If 5 now acts as support, then the next resistance levels come into play, around $5.75 and $6. That's where eyes will go if Friday's session sees follow-through. Of course, we shouldn't ignore the risks. NIO is still unprofitable, still facing stiff competition, and still tied to a Chinese economy that is recovering unevenly. Consumer demand in China remains patchy, and government support, while present, hasn't been the silver bullet investors once hoped for. Add to that the uncertainty around US-China relations and ongoing global trade tensions, and it's clear that NIO operates in a difficult environment. Thursday's rally doesn't erase those challenges. What it does do is show that investors are willing, at least for now, to look past them and focus on the positives. Those positives are worth emphasizing. The Onvo brand represents NIO's best shot yet at scaling into the mass market, where volumes are higher and brand visibility grows faster. Battery swap technology, once seen as a gimmick, is gaining traction, with daily usage numbers climbing and many stations now approaching break-even. The infrastructure, expensive as it has been, is starting to prove its value. International expansion is still early, but the presence in Europe, even if small, signals ambition and optionality. These are the kinds of factors that give long-term investors hope that NIO can be more than just another struggling EV startup. So as we head into Friday's open, the setup looks like this. NIO has momentum, it has an upgrade in its pocket, it has management sounding more confident, and it has shorts feeling some pressure. At the same time, the broader market is nervous, waiting for Powell's words. The risk is that if the Fed signals a tougher stance on rates, growth stocks across the board could sell off, and NIO would likely be caught in that wave. The opportunity is that if Powell leans patient, the combination of macro relief and company momentum could give NIO the spark it needs to push even higher. For short-term traders, the key levels are clear. Watch $5 on the downside, that's now the line in the sand. As long as the stock holds above that, the bullish case remains intact. On the upside, watch for a move toward 575 and 6. If volume confirms, that could open the door to a more sustained rally. For longer-term investors, the message is more about conviction. If you believe in NIO's strategy, Thursday was an encouraging sign that the market is beginning to share that belief, at least in part. Either way, Friday promises to be pivotal. It's not just about NIO anymore, it's about how a company in transition navigates a macro landscape in flux. The resilience above $5 is impressive, but the real test is still to come. Will NIO hold its ground once Powell speaks, or will it get swept up in whatever tide the Fed sets in motion? That's the question on every investor's mind this morning. In summary, NIO enters Friday pre-market stronger than it has in months. It has reclaimed a key level, attracted analyst support, and shown resilience in the face of a weak tape. At the same time, it faces the same macro uncertainty as every other growth stock, with Jackson Hole looming large. For traders, this is the kind of setup you live for, a stock with momentum heading into a market-moving event. For investors, it's a reminder that NIO's story is still unfolding, and days like this are milestones along the way. So as the bell approaches, all eyes are on NIO. Will the breakout above $5 become the foundation for a new uptrend, or will the weight of macro headwinds pull it back down? One thing certain, Friday is going to tell us a lot about where this stock stands and where it might be heading next.